Let's bring in Ted Oakley, Oxbow Advisors managing partner. And Ted, just walk me through your thesis right now as you see it in investing in the markets. On the one hand, you've got new numbers out today, at least on initial unemployment claims, which seems to continue to point to a recovery. But there's got to be inflation concerns that are continuing to sort of percolate in the back.
Well, Akiko, that's right. You've got both sides of the coin. If you look at it, we do have some inflation, but if you pulled out some of the things, used cars, hotels, airlines, different things, you sort of get back to normal. But on the other side, we just now have rents kicking in, which is going to really drive it over the next few months. So I think what we have is sort of a boom type look coming out of that, and probably going back, I wouldn't say a bust, but it's probably go back to more normalized. For us in investing, obviously, we're in a situation where, it's tough in the bond markets. We haven't really bought a long bond in, a long time, 10 or 11 months probably. And on the stock side, we're carrying a fairly high cash balance right now. Prices are high. I know people are very complacent about it and don't worry about it. But the key here is that, eventually you'll come back to the mean. And so for us, that's sort of where we are right now. We do own some commodities, we own some gold, we own growth stocks as well. So we're fairly balanced right now.
Yeah, Ted, if there has been an explosion in one spot of the market, for sure to point out it's commodities. Deutsche Bank was out highlighting the fact that we've seen a bigger boost in commodity prices in this recovery than what we saw in the early recovery back in the Great Depression. I mean, when you look at the oil market right now, how big of a piece of portfolios should energy be if you do expect that to continue, and if you expect it to continue? What's your outlook there?
Well, we have 4 strategies, Zach, and the one that has energy in it has about 12 to 14% energy. It's been well for us this year. I think what people forget about energy, and it's not that people on the investment side are not interested in in the environment. It's just that it's just a fact of where we are. There's been no capital outlay in the industry at all over the last 2 or 3 years, and now they're being punished really from the top side as far as the government goes. So they're not going to put any money into it either. But we just don't have enough. We don't have enough time to get what they want in that short period. So energy, and at least in our opinion, will continue to do really well over the next 5 years.
So let's talk about specific stock picks. I mean, speaking of energy, you've got Valero as one pick that you like. What do you think separates this one out apart from the other energy names you see in the market?
Well, Akiko, it's one of what we own. What we try to own is all 3 segments of the energy market. We have the producers, we have the pipelines, and then we have the refiners. And Valero is the only refiner we own because we think they're the best one. But we also own gas pipelines, and we own producers as well. And what you try to do is pick what you think is the best in those categories. And the key to all of those, really, including Valero, which is like a 5.1 or 2% dividend here, is that these stocks have really good cash flow. And I think people are overlooking that. That's one of the great places to get cash flow today.
Yeah, and then the other thing too, I mean, as Akiko was opening with a look at inflation, curious if you are kind of, you have a pretty, as you opened, significant chunk, or at least chunk worth mentioning there in cash. I mean, what is the right way in your mind to maybe be hedging against inflation? Is it gold? I'm not sure if you're into cryptocurrencies, but what's kind of the takeaway there if investors are looking to be a little bit more defensive?
Well, Zach, for us, from an inflation side, we own gold in almost every strategy. But on the strategy we have that have the other commodities, we have fertilizer, which really feeds in the food side. We have timber. And so what we're looking for, it's very hard managing money to say, hey, we're going to be 100% that we're coming on this inflation thing. And I can honestly say for us, we don't know. And so what we try to do is have some exposure, but not go overboard. But I think we'll participate if we have it. But I think the biggest thing people don't realize in the commodity business is that you've gone into at least 5 years now where capital expenditures are really, really low. And so you're going to have to catch up somewhere. And we think that's happening now.
Ted Oakley, Oxbow Advisors Managing Partner. Always good to have you on. Thanks so much for joining us today.